Hi there, my name is Mike English. I wanted to walk you through how you can create financials for your business plan. Most students don't necessarily enjoy writing a business plan, but it can be exciting, and thinking about a business idea can get you through some of the harder parts of the plan. But when you get to the financials, a lot of students have some trouble. In the financial section, it's one of the most intensive and intimidating parts of the business plan, but it could be the place where you learn the most about your business. Importantly, it can be the difference between success and failure. You may feel like your business is doing well, but unless you have the bottom line to prove it, you could be in trouble. So I wanted to show you two quick financial statements that you can include in your business plan. One is a profit and loss projection, and the other is a cash flow statement. So first, let me just pull up the business plan I've been working on. This is a business plan for a school photography business. In this business, what this company would do is they would provide photography services to elementary school. You know those class photos at the end of the year? Well, this would be a company that would take those photos and get paid for them. And this plan is being created by two teenagers who are entering their senior year of high school and looking to make some extra money. And while putting together this plan, they realized that maybe they could make this into a business that could actually fund their college education. So I'm going to just kind of drag you through some of the business plan and get down to the financials. So here's the mission statement for this company. The mission is to capture elementary school memories by delivering first-class service and high-quality pictures to school administrators, teachers, parents, and students. So we go through their goals, we do some market analysis, a company description, an overview of the organization and management, a marketing and sales strategy. And then we get down to the financials. And what you'll see here is what looks like a pretty complicated spreadsheet that I've pulled in. But really, when you look at it, it's not as complicated as it may seem. And once you've written the rest of your business plan, you should really know what most of this is. So first, you think about what the revenue for the business will be. For this company, we're looking at school events, school picture packages, and album CDs. So this is where they're going to make all their money. And you can see after doing their analysis and their plans, they've determined that this is the amount of money they can plan to bring in over the years. And since it's a photography company, there are some significant fixed costs. And so the fixed costs are those upfront costs that you really need to spend to get the business started, but they may not last. In other words, once you buy your camera, you may not need to buy a new camera every year. Maybe this camera will actually last you for 5 years. And that's the similar case for many of these fixed costs. But they do have variable costs that they're counting in here too, such as legal and accounting fees, flashes, picture prints, shipping, their website, advertising, travel, and they've even included some funding for professional development classes so they can get better at what they're doing. And so the bottom line for this company is that their net income in the first year is going to be negative. And this shouldn't scare you, because this is the case for most new businesses. And the way they have budgeted for their second year is somewhat aggressive, and they actually plan to pull in a profit for their second year, and that would be this column here. And as you can see, they're planning their business to bring in a set amount of income, roughly $17,000 per year. And at this point, these two would be in college, and so this would be essentially bringing in a good bit of their tuition money and room and board for college. And so now I wanted to bring you down to the cash flow statement. And the cash flow statement shows the beginning balance, and so this number right here, this $5,000, is essentially a loan that they've obtained from their parents or from a bank. And then we have the cash inflow, cash outflow, and the loan repayment. So they're planning to pay off that whole loan by the end of the second year. And as you see, they have an ending cash balance that is positive after the first year, and so on until the last year, where they've really accrued quite a bit of revenue. So where did this spreadsheet come from? I didn't create this spreadsheet in a Microsoft Word document. Rather, I put it together in a Microsoft Excel spreadsheet. And so what we have here is a spreadsheet where the revenue and the expenses are entered, and down at the bottom, this number, as you can see, it subtracts the expenses from the income. And so if you make a change to one of your, say one of your assumptions, or you find out that you're not going to need to spend quite as much on legal and accounting fees, you can make the change here, and down at the bottom the number will automatically adjust. It's very important to include in some assumptions, and so by sitting down and for each line item writing out the assumptions, you'll really get better at predicting what those expenses and revenue will be. And more importantly, if you're giving a presentation or seeking a loan, the potential funder will know that you've really done your homework and you really know how much this is going to cost. So that's a quick overview of how you can start to create your financials for your business plan. And like I said, once you start walking through the other elements of the plan, once you get to the financials, you'll probably know a lot more than you thought you did about creating your financial statements and projections.